Hi, everyone. I'm Caroline Zakari, and I work for the Office of Civics and Community Services here at the Los Angeles Public Library. Welcome to Financial Planning Month. Today's program is called Investor Protection with the SEC, and it's part of a month of programs in support of financial planning. This program is brought to you by the Securities and Exchange Commission and the Los Angeles Public Library. Today, Carol Lally from the SEC will talk about what the SEC does and how it can help you invest wisely, common scams, and tips to avoid fraud. We will have a brief Q&A after the presentation, so please send us your questions throughout the program. Thank you, and take it away, Carol.
Good afternoon. Thank you very much, and thank you for inviting me to participate in this week. As was said, my name is Carol Lally. I'm an attorney with the United States Securities and Exchange Commission, which is the federal regulator of the securities market. I work in the Los Angeles Public Office in downtown Los Angeles, which covers all of Southern California, Arizona, Nevada, Hawaii, and the Pacific Islands. So I'm really excited to be here today. I do have a PowerPoint presentation that I'm going to share with everyone, and hopefully we'll be able to visit some of the SEC websites during the presentation, and I will show you some information there. While I'm doing the PowerPoint presentation, I'm going to take myself off screen because I find it pretty distracting to look at the PowerPoint and look at myself on camera, but then I'll come back on screen at the end of the presentation so that I can take any of your questions. And I'll take your questions at the end. If you want to enter them in the chat as we go along, that's fine. If you just want to hold them and ask them verbally at the end, that's okay too. So if you bear with me for just a minute, I will get the presentation up. All right, hopefully everybody can see that. It should be on screen. Let me take myself off camera. All right, as was discussed, we're going to talk about investing wisely and protecting yourself from investment scams today. Right out of the gate, any presentation that the SEC provides, we're required to say at the beginning, this is not an official statement of SEC policy. I cannot give legal advice. I cannot give business advice or investment advice, but hopefully you're going to learn some useful information today about investing wisely and protecting yourself from investment scams. Why are we going to talk about investment scams today? Well, the simple answer is that financial fraud is incredibly prevalent. More than 80% of us are going to be solicited for potentially fraudulent investment offers in our lifetime. More than 10% of us are going to participate in those fraudulent offers, and pretty close to 10% of us are going to lose significant funds in the fraudulent offers, unfortunately. As you can see, billions of dollars are lost every year to fraud, and this stat is actually a little bit old. You can see there on the fine print on the slide, this is from 2011, so 13 years ago. You can only imagine how much more money is being lost on a yearly basis now due to fraud. So really troubling and unfortunate, but hopefully with the information that we're providing here today, you'll learn some good tips on how to protect yourself. This is what we're going to cover. We're going to talk about the Securities and Exchange Commission just very briefly. So if you're not familiar with the agency, you'll know a little bit more about it. We're going to identify some red flags of fraud so you'll know how to spot them when you encounter them, because highly likely that at some point you will encounter them. We're going to talk about some of the most common scams that we see being perpetrated, and then some tips that you can use to protect yourself, and finally SEC resources and where they are and how to access them. So there are a few videos embedded in this PowerPoint presentation. I don't actually make the PowerPoint, headquarters in DC does. I find they're pretty hard to show virtual. It tends to slow down and freeze the presentation. So when we get to a slide with a video embedded in it, I'm just going to skip over that. But I'll give you a sense of what this video would say. Essentially, that the SEC is here to serve the American public, the investing public. It's very important to us that investors are protected. This is what we view really as our highest mission, and work very hard to provide the information and the resources to make sure the markets are functioning as they should. When they do function as they should, they contribute to the most robust economy really in the history of the world. So that's the essential message from the SEC. You can see it in our three-part mission, which is to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation to help keep the economy humming and growing and benefiting all of us. All right, there we go. As part of that mission, the SEC oversees really a pretty huge market, the largest securities market in the world, largest, most robust securities market in the world, including thousands of financial professionals. Part of what we do is review the disclosures of public companies. We examine registrants like broker-dealers and investment advisors, and we have a division of enforcement that enforces the federal securities laws. Sometimes people are not familiar with the SEC being a civil enforcement agency. So not infrequently I get asked, why hasn't the SEC put so-and-so bad guy in jail? And the short answer is that we are not a criminal agency. We are, contrary to sometimes popular belief, we are a civil agency. So we do not have the ability to put people in jail. I wish that we did, but I can't tell you, when I worked in the Division of Enforcement as an enforcement attorney, very frequently we were working parallel with the criminal authorities. So there might be a criminal investigation ongoing by the FBI or the IRS or Postal Inspection Service at the same time that the SEC was conducting its civil investigation. But even though we're a civil agency, we do have pretty robust enforcement remedies. We have subpoena authority to go out and subpoena testimony and records. We can bring lawsuits in an administrative form or in federal court. We can get a receiver imposed over an entity if the bad guys have taken control of an entity and are using that entity to run a fraudulent scheme against investors. We can get a receiver in place to take control back of the entity and try to get the money back to harmed investors. We can get disgorgement from the bad guys. We can get repatriation if the money has gone overseas. We can put in place border watches if people have fled overseas. We can bar people from working in the securities industry. We can impose fines. So we really have a pretty broad range of remedies. And as you can see, we collect billions of dollars every year from our several hundred enforcement actions, and we try to get as much money back as possible to harmed investors. Almost all of the information, really all of the information in this presentation is going to come from our website, investor.gov. So if you do nothing else, I hope that after this presentation, you go and visit investor.gov. It's got a lot of really useful information, including, you can see there on the slide with the red arrow, a drop-down menu under the heading Protect Your Investments. A lot of useful information on how to protect your investments. But hopefully, if I can make the technology work and we have time, we'll go visit this website during my presentation, and I'll walk you through it to give you a sense of what the website looks like. That's the SEC. As I said, the Los Angeles office covers all of Southern California. We have a division of enforcement and we have a division of examinations in the Los Angeles office. And I will tell you at the end how you can reach out to our office if you want to contact us with questions or complaints. But before we get to that, let's talk about some of the red flags of fraud. As we talked about, unfortunately, fraud is really prevalent. And if any of you have seen the movie The Wolf of Wall Street, which this is a little embedded clip on this slide of a scene from The Wolf of Wall Street, or a movie called Boiler Room, they actually both have scenes that give a pretty good sense of what a pitch is like from a fraudster. So if you've seen The Wolf of Wall Street, maybe you remember the scene where the character played by Leonardo DiCaprio is trying to sell a securities offering over the phone. And he uses a really great sales job, very enthusiastic about what he's pitching. But if you've seen the movie, you know that what he's selling are really fake securities, companies that don't really exist, that might be operating out of mom's basement, that don't have any real track record, aren't really producing any products. And unfortunately, this is a kind of scheme that we'll talk about in a little more detail called a market manipulation scheme that is quite prevalent. Bottom line is you want to be very cautious about where you get your investing advice and recommendations from, and don't be taken in by the slick sales pitch. If it sounds too good to be true, just like anything else in life, it probably is. So if somebody says to you, this investment is safe, but has the potential for high returns, it's a very conservative investment with really high returns, that's a huge red flag. It's probably helpful to know that over the life of the modern US stock market, returns have averaged somewhere around 10%. So if you go back all the way to the turn of the last century, really even before the Depression, and you average out the returns from that time to today, they average out to about 10%. So if anybody is offering you returns that are higher than 10%, that's not to say that's a fraud, but it should at least make your antenna pick up and know that you're talking about potentially returns that are significantly outperforming the long-term average. How are they going to outperform the long-term average? Understand that risk and potential reward are correlated. So potentially high returns, at the very least, is an indicator that this is a potentially risky investment. Risk and return are correlated. The more safe, the more conservative the investment is, the more likely that the potential returns are lower. So somebody's guaranteeing you returns, huge red flag. Risk is always involved in investments. If somebody is suggesting high returns with low risk, again, a huge red flag as risk and return are correlated. If there's pressure to buy right now, that's a red flag because this is probably one of the most important financial decisions you're going to make in your life. Something akin to buying a house. If you're investing, for most individual investors, we're investing for the long term, for our retirement. We're going to need those funds when we get to our retirement years, and we're going to need substantial funds in order to be able to live comfortably in retirement. So this is a big financial decision. No legitimate securities professional is going to expect you to make that kind of financial decision at the drop of a hat. They're going to know that you want to do your research, you want to consider it carefully, you're going to want to see documentation. How does the investment work? How does it make its returns? Who's involved in the investment? Who's running the investment? How do they get paid? You're going to want to see all of that kind of documentation. So if you're being pressured to act right away, if they're not willing to provide you with clear, concrete, probably pretty detailed documentation, that's a big red flag. If you get the documentation and it doesn't do a good job of explaining the investment, if it's riddled with spelling or grammatical errors, these are probably signs that something is amiss and you want to do a little more research or possibly step away. Unsolicited offers are also frequently a red flag, and you might receive an unsolicited offer through social media, through email, via the phone. Lots of times there'll be pressure in this kind of communication to act right away, because if you don't, you're going to pass up this one-time opportunity. The best tactic in this situation is to walk away and for you to identify potential investments through your own efforts and research instead of waiting for someone to approach you. And then you'll know you've done your research in advance. You'll be using the criteria that are appropriate for you to identify your best investment as opposed to just responding to a sales pitch. But if you can't resist, if you do respond to the sales pitch, at least you should do some research before committing. And we will talk about how to do that research. Fraudsters are very, very slick, unfortunately. I've sat across the deposition table from dozens of them, and they all tend to be extremely charming, the kind of people you would love to hang out with, go have a beer with at the local bar. You would feel comfortable leaving your kids with them for an afternoon of activities. That kind of person, you want to know them socially. They just seem like great, fun people to hang out with. But they really use those social skills to your detriment when it comes to persuading you to engage in an investment. They will dangle the prospect of wealth in front of you. They might use a bunch of alphabet soup credentials behind their last name or claim to have some kind of special certificate that gives them particular expertise. They'll pressure you to act quickly because there's a limited supply or a limited amount of time to get in the investment. They'll want you to believe that other people that you trust, whether it's celebrities or influencers or people who you respect in the community or professionals that you respect, are already participating. And they might offer to do some sort of small favor for you in return for a big favor. And where we see this most often is something like a free lunch seminar. You might get these flyers in the mail, come to the local country club or fancy restaurant for a free lunch. You'll get some free investing advice and you don't have to invest in anything. Once you get there and you get the free lunch, someone will give their presentation And they might not pressure you directly to invest with them, but they will create that social structure where you feel like, oh, here's a person who very nicely gave me free advice. In return for this free advice, I want to, do them the favor of at least investing a small amount of money with them. And so you've gotten maybe a $20 rubber chicken lunch, and they get several $1,000s out of you for an investment. It's not really an equal exchange. And it doesn't mean that they necessarily have your best interest in mind, that whatever they're investing in, even if it's not fraudulent, maybe they're not investment products that meet your investment goals or your own risk tolerance. So don't let that social situation create unnecessary pressure to do them a favor of investing with them. The best approach is really not to participate in those kind of events at all. But if you do, go in with skepticism and be prepared to invest nothing and walk away. So again, we've got a video that I'm sorry, it's in the presentation, but I really think if I played it, it would probably make the presentation crash. But essentially, the securities salespeople can be no different than any other sales pitch you might encounter, whether it's buying a car or going to the electronics store, where they're really going to try to turn on the charm and use the words that they think will be persuasive to you. Step away. If it's an unsolicited offer, really the best advice is not to engage at all, but at all times maintain healthy skepticism and do your research before responding. So what are some of the common scams that we see? Well, I'm going to go into these in a little more detail and describe them and give you a sense of the kind of scam that you might be approached by. And I'll talk about a few that aren't on the slide as well. Pump and dump is a really common scheme. So if you did see The Wolf of Wall Street, the individual that's portrayed in that movie is running a series of pump and dumps. These are basically hyping up the stock through false and misleading public statements. They usually involve penny stocks. These are stocks whose company's stock is traded at usually around or under $1 a share. It's very easy with these small companies for bad guys to get control of them. Usually they're pretty small. Sometimes they may have been dormant for a long time. The bad guys can go in, get control of the company, get a lot of the stock issued to themselves or their fellow bad guys behind the scenes, then go out and spread misleading information about the company through press releases. Maybe they will hire someone to operate a boiler room and send out a bunch of email spam and unsolicited phone calls, pumping up the stock of the company, pressuring people to buy quickly. The public gets this information. People buy the stock based on the pumping of the hyping, the false information. They figure, it's only a penny a share or 50 cents a share, $1 a share. That's not that much money. I might as well get in. All of that buying drives the price of the stock up. Meanwhile, the fraudsters are holding on to their shares behind the scenes, and as the price of the stock goes up, they sell. So the stock that you're buying is probably really coming from those bad guy insiders, and they are making the money. They maybe got their shares at 0 cents a share. So for example, pump and dump that I worked on involved a fraudster out of Seattle many years ago. This is probably at this point, maybe 12, 15 years ago. And he was pumping up a company that supposedly made electronic kiosks in airports. And this is before this kind of thing was pretty prevalent everywhere in airports. So you go into the electronic kiosk, you press on it, it tells you the shortest path to your gate, what restaurants were in between you and your gate, where you could go to buy a magazine, etc. He was supposed to be deploying these kiosks all over airports all across the country in these big contracts. And he sent out a lot of press releases pumping up the stock of the company, talking about what the company was going to do. The company did not have any kiosks. It did not have any contracts with airports to deploy these kiosks. This was all a lie. But the insider had been issued millions of shares of the company's stock at 0 cents a share. This is not uncommon for founders to be issued shares of the company at the beginning of the company at little to no cost. But there is usually a restricted period where they are not allowed to trade those shares for some amount of time, usually many years. But this guy had had those restrictive legends on the shares illegally removed. And so as the stock price went up, unbeknownst to the public, he was selling all of those shares that he got at 0 cents a share. And the stock price had gone up to several dollars. So even if the stock price is only $5, that's a profit of $5 a share. I think he held 3 million shares. So 5 times 3, that's $15 million right there. Eventually, it comes out that there are no kiosks, everything is fake, and the price of the stock plummets. But the public is left holding those shares that they bought. And these markets tend to be pretty illiquid, meaning there are not a lot of other buyers. It's not like buying shares of Exxon or some Fortune 500 company. There's just not a big market for them. And so then they're left with basically worthless stock that it's very hard to get rid of. This is an extremely common scheme. You will see it a lot in the microcap or penny stock space. So just be very cautious investing in this space. Even if we're only talking a few $1,000s, a few $1,000s is not nothing. And if somebody routinely invests in this kind of scheme, they can find themselves losing really a great deal of money. So be very cautious investing in this kind of company. By the way, he was prosecuted. We did put a receiver in place to take control of the company. He was barred from working in the industry. We got a disgorgement order to return millions of dollars. So that company no longer exists, was put out of business. But unfortunately, there are dozens and dozens of these schemes at any given moment. So just be very careful. Another scheme that you've probably heard a great deal about is a Ponzi scheme. And this is essentially a scheme in which there is no real business. The scammer is saying, I have a company that's going to, let's say, build a bunch of crypto mining machines. And it's going to build these machines in maybe overseas, in the Philippines. And we're going to have thousands upon thousands of these crypto mining machines, invest in my crypto company, and the returns that are generated by mining crypto will be returned to you as an investor. But in fact, that maybe there are no crypto mining machines, maybe nothing is being built in the Philippines. It would be very hard to check that. Unlikely you're going to get on a plane and go over to the Philippines and demand to see the crypto mining farm. What's really happening is his money is coming in from new investors. He's just running that money in a circle and giving it to the older investors who've already been investing for some time and telling them that these are the returns generated by the business's profit. Eventually, this Ponzi scheme collapses under its own weight. You can't maintain this circle of funds indefinitely. As you bring on new and new investors, there are more and more people clamoring for returns and no real source of returns because there's no real business. Ponzi schemes, incredibly prevalent. We see these all the time. Some red flags are that the brokers and dealers who sell these investments are not registered. The registrations, the investments themselves are not registered. The business structure, when described, frequently is very complex and doesn't seem to make a lot of sense. And unfortunately, sometimes investors think, oh, well, it's me. I can't figure out the investment. But really, the truth usually is you can't figure it out because it is not figure outable. There's no real business behind it. They make it sound complex for a reason. And very frequently, you see these promises of high returns with little to no risk. And remember that I said risk and reward are correlated. So the potential returns should be correlated with the risk. If the potential returns are higher, that's an indication that this is a risky investment with a greater chance that the investment is not going to pay off. Low risk and potentially high returns are not something that exist naturally. So that is a red flag of a potential Ponzi scheme. Similar kind of scheme is a pyramid scheme. People often get these confused. They're very similar, but not quite the same. A pyramid scheme is, or another word for it is multi-level marketing, is a scheme in which the real emphasis is on recruiting other people to join as salespeople rather than on producing a genuine product or service. If you are solicited to participate in a multi-level marketing or pyramid scheme, do your research. Is there a real underlying product or service being sold? Most likely, in most instances, the real money is coming from recruiting other people to participate in being salespeople. Those people have to pay some kind of fee in order to join. There's some kind of elaborate downline structure. This is usually a scheme. And you should have your antenna up, and it's a really big red flag if this kind of sales structure exists. Lots of times scammers pretend to be part of the government. The SEC does not endorse any particular investment. We do not assist in the purchase of sale or securities. We don't make unsolicited communications seeking detailed information. So if any of this happens and somebody is claiming to be part of the SEC, hang up the phone, don't respond to the email. reach out to the SEC office and find out, ask us, are you endorsing this investment? Are you lending your weight behind this particular person? Does this person work at the SEC? And we'll try to help you. But basically, you're not going to get this kind of communication from the federal government. Investment newsletters, lots of times things that appear to be objective third-party newsletters are in fact really advertising bulletins. The market manipulation that I told you about before that involved the kiosks out of Seattle, this person was using a so-called investment newsletter to distribute the pumping information about the stock, the false press releases. This wasn't an objective investment publication like the Wall Street Journal. This was really a paid advertisement. The person who was producing the newsletter was paid to tout these scammy stocks. So be very skeptical of anything claiming to be objective investment advice. An advance fee fraud, this isn't technically a securities fraud, but this is something that we see not infrequently where a scammer will ask for some kind of payment upfront before the deal can be completed. It might be described as a fee or a commission or some kind of incidental expense or a tax. What happens is people will pay this fee, which might be pretty nominal, $25 or something like that, and then you will never hear from the person who contacted you again. You will never get the benefit that you think you're getting. Maybe you're paying for some kind of, shipping expenses. The thing that you're expecting to be shipped to you, whether it's investment documents or an actual physical item, it's never going to appear. And if they repeat this scam thousands of times, you can see where that $25 adds up. We now see a permutation of this scheme that is called a romance scheme sometimes. Sometimes it's called a pig butchering scheme, which is not a very polite term, but essentially involves some kind of social connection being formed over social media or email or the internet in some way, in which the individual, you or me, feel like we're forming a genuine connection with the person. And sometimes it is what appears to be a romantic connection. And then the person needs money to buy a plane ticket to come visit, or they have a friend who's sick, or some sort of social personal situation has arisen where they just need some short-term money. And particularly we see retirees being targeted in these schemes because fraudsters know that retirees are most likely to have significant funds in some kind of retirement account. Perhaps people are lonely and they don't have as much contact with family or work anymore. And sometimes we see very significant amounts of money going out of people's accounts. Maybe they're along with some kind of romantic connection, they're touting some kind of investment scheme. Be very, very cautious of participating in these online social media, social arrangements in which some kind of friendship or romantic relationship is combined with requests for money. Very often this is a scheme, and very often these actors are overseas. And sometimes they're overseas in places where we can't reach them. It's one thing if the bad guy is, or bad woman, is emailing you or sending you messages from, say, the UK. It's another thing if the bad actor is in, let's say, China. We don't have the best diplomatic relations with China. It can be very difficult, if not impossible, for us to get money back from China or to prosecute people who are in China. And very often the bad actors in these schemes are overseas in those kinds of locations. So be extremely cautious. Affinity fraud, these could be any of these schemes, but really where people are targeting members of their own community. And we see this not infrequently with Ponzi schemes. People will pretend to be, or will actually be, part of the community, whether it's a church group or an association of people in the same profession or what have you. They use those connections to build up trust and then take advantage of those trustful bonds that they've built. And always remember, just because the person that is telling you about the investment may be someone you trust, a trusted friend or family member, doesn't mean that they themselves haven't been scammed. Or at the very least, their investment objectives and their risk tolerance may not be the same as yours. So no matter who's pitching the investment to you, you still want to do the research we're going to talk about. So for example, not infrequently we see members of the military or veterans targeting other members of the military. Here on the screen, you see an example of a former Marine who was pretending to be a successful securities investor. He targeted his fellow veterans and other people in the military to invest. Was claiming an annual return of nearly 200%. That's a crazy, astronomically high return. Remember that I said over the long term, the average is 10%? How much higher is 200%? I mean, that's 20 times higher. That's crazy. Your antenna should definitely go up at that point. This is a very questionable rate of return. And even if it's legitimate, it means this is an extremely risky investment. In this particular case, of the millions of dollars he collected from investors, he actually invested only half of that money and spent a pretty good chunk of it on himself. And what we see is these people usually spend money on things like luxury goods, gambling, fancy trips, nights out, at elaborate nightclubs and restaurants. And as I said, we can go in, we can seize control and put freezes on people's bank accounts and securities accounts. But very often, fraudsters spend money on the kind of things where you can't get the money back. If the money's been spent on a fancy dinner or gambling, I can't get that money back. It's gone. If they send it overseas to China, I can't get that money back. It's gone. If it's in a thing, like a car or a house, we'll seize control of the car, we'll seize control of the house, and we'll sell it, and we'll try to get the proceeds back to investors. If it's in the bank account or trading account, we'll seize it, try to get it back to harmed investors. But some significant portion of the money probably is gone. So the best case scenario is not to invest in these kinds of questionable investment schemes at all. Anybody and everybody is a target of these kinds of schemes. No matter what kind of community you belong to, there is somebody out there targeting that community. So please be careful. Before you invest, investor.gov. I'm going to skip over this video and we're going to talk about how you can use investor.gov to protect yourself. So first and foremost, the thing that you want to do is do your research. Now that you're aware of some of the persuasion tactics and the red flags of fraud, you're aware of some of the common investment scams, let's talk about how you do your research. If somebody approaches you with an investment opportunity, or you've identified an investment that you might be interested in investing in, you want to research both the person who is pitching the investment to you, the salesperson, the company that the salesperson works for, and the investment itself, the underlying thing that you're investing in. So how do you do that? You do that by going to investor.gov. So I'm going to stop sharing this PowerPoint, and hopefully I'll be able to take you to investor.gov and show you how it works. Okay, hopefully everybody should be able to see investor.gov. This is the landing page, and right here on the landing page, the first thing that you see is check out your investment professional. And you can see both the individual and the firm you can search. So let's say that a man named Jordan Belfort has approached me and wants to sell me securities. Let's put his name in this database. If his name doesn't pop up at all, that is a big red flag. If you offer or sell securities for compensation in this country, you need to be registered or licensed. If you're getting paid as a commission, if you are most likely a broker or a dealer, if you're getting paid as some sort of assets under management, give me $1,000 and I will take 1% of that, of the $1,000 as my payment, then you, in exchange for my investment advice, then you might be an investment advisor. Either way, you need to be licensed or registered, and you should be in this database. So if Jordan Belfort approached you and he wasn't in this database at all, that would be a big red flag. You're dealing with an unregistered professional, and that is extremely questionable. But in this case, Mr. Belfort is in this database. So let's look it up and see what we can find out about Mr. Belfort. Okay, right off the bat, we see he's been barred by FINRA or the SEC. So that's a big red flag, but let's get the full report. Let's see what else we can see about Mr. Belfort. Here's a little bit of information on the landing page. I always click on this tab, Detailed Report. So let's pull up the detailed report. Now this is written for the general public. There will be some technical language in here, but generally speaking, it's been written in such a manner that it should be accessible to most people. And at the very beginning of the report, it will tell you where the information comes from. Then it'll tell you a little bit about this individual's qualifications. He's passed various securities exams. He was registered with various securities entities. And we can go down and learn a little bit more. And if you Google These exams, Series 4, Series 7, Series 63, you can see what they are, but basically they're the basics exams that you need to be a broker. So far so good. Here's where he was registered. And now at the end of the report, and when he was employed there, you can see the dates of his employment. Now at the end of the report, you will see disclosure of regulatory events. So these are going to be customer complaints, lawsuits, prosecutions, these sorts of things. Most individuals are going to have no disclosure events at the end. Entities, it kind of depends. If it's a really large entity, like the McDonald's of securities investing, obviously they've had some customer complaints and lawsuits. If it's a smaller entity, they may not have any. But you get to make your own decision. That's the way the securities markets and the regulatory landscape work. As long as you are provided with accurate, fair, fulsome information, then it's on you to decide whether or not you want to do business with that person. It becomes a problem and a fraud when people are hiding the information from you or lying. That's when it becomes potentially a violation of the law. So this is the information that is publicly available to help you make your decision. And maybe you'll see something in here, but you'll think, that doesn't bother me. I still want to do business with this person. Or maybe it will. Let's see, cause issues for you and cause you to reconsider doing business. Let's see what Mr. Belfort has in his background. So he's been sued by the state of Michigan for a securities violation. He's been sued by the state of Maryland for a securities violation. And in the very end, you can see he's been sued by the Securities and Exchange Commission. And if you look at this fine print, you can see that he was sued in a multi-million-dollar scheme, ordered to pay $1.5 million in disgorgement, plus about $500,000 in interest and a civil penalty of about $500,000. He has been enjoined, that is barred from ever working in the securities industry again, because he operated a boiler room and manipulated the market price of securities. So if you don't know who Mr. Belfort is a real life person. He is the Wolf of Wall Street that was portrayed by Leonardo DiCaprio in the Wolf of Wall Street movie. For me, this is information that I would want to know before I did business with Mr. Belfort. So I'm going to stop sharing and let me go back. And then I will get you back to investor.gov so you can see the website a little more fully. This is the information that you want to look up about the individual. And the website itself, as I say, has a lot of really useful information. All kinds of financial tools and calculators, information on crypto assets. You can sign up to receive our investor alerts and bulletins, which describe some of the most recent prevalent securities scams. If you want to submit a question to us or a complaint, here's where you do it, right here in what we call our TCR portal. So that's investor.gov, and that's what you use to do basic research. And there's just really a whole lot of information in here. And again, I encourage you to kind of bounce around this website and take a look at it and see what's in here that might be useful for you. Okay, now I'm going to share another SEC website for you. And this one is sec.gov. So this website is more governmenty looking. Investor.gov is definitely written, for the general public with a lot of information about investing wisely and resources. SEC.gov is really about the agency itself and has more technical information on it, but there are actually a lot of really useful spots here too. There's our newsroom that you can sign up for, information about small businesses and investors. You can also submit a tip or complaint here. But remember how I said you want to research both the person who's selling you the security and the company that person works for, but you also want to research the thing that you're investing in itself, the security. And here's how you do that. You go to search filings. You go in here, and this will bring you up to the company search database. And this is where you'll search the company. So for example, if I wanted to invest in Exxon, here I can look up Exxon, the company, and its securities filings. Now, if somebody's saying, let's invest in XYZ company, you put their name in this database and they are not here, that is a huge red flag. If you offer or sell your securities in the United States, chances are you have to be registered with us, and your company and its securities should be in this database. So if XYZ company is not in this database, that's a red flag. Even if they are claiming that their securities are exempt with registration, they should still be in this database because they will have filed a form with us called a Form D, explaining why they think they are exempt from registration, and that registration will be in this database. So if your neighbor approaches you, says, I have this great investment for you, XYZ company, first thing you should do is go to this database and see if XYZ company is in here. If it's not, a red flag. If it is in here, then there's all kinds of useful information, just the general background information about the company. But then here's where you will find filings like you may have heard of 10Ks and 10Qs that give the financial reports of the company, 8Ks, these are sort of current activities that correspond to press releases. So here we can see some of the directors or officers of Exxon left recently, and they've done an announcement about that. All kinds of useful information. If you're saying to yourself, that's great, but I don't really know how to read a 10K or a 10Q, I completely understand. Sometimes these documents are pretty lengthy and difficult to understand, but there are resources here under Edgar Resources, a lot of really useful information, including guides on how to read 10Ks and 10Qs. So let me go back to the presentation, and I will show you some slides that have that same information in it so you can get a sense of what that looks like. All right, so here's our presentation. Here again, investor.gov, you want to go to check the salesperson and the company that they work for, make sure they're licensed or registered. Then you want to check investor.gov. And as you can see here, there are under the search bar guides, how to research public companies, right here on the right-hand side. And those guides will tell you things, or here's another way of looking at it, guides, how to research a public company. Things such as, what is a 10K? And that's the annual report that the company files about its financials. What is a 10Q? That's the quarterly report that they file. And how do I read the information in those reports? Should have a lot of useful information. How does the company make its money? What are the challenges that the company is experiencing or anticipates experiencing? What were their sales? What were their losses? What are their taxes? Who runs the company? All kinds of useful information that will help you determine whether or not this is a company it makes sense for you to invest in. So again, make sure to use these guides on how to research public companies. If you don't know already, just like any other kind of account, with your investment accounts, you want to make sure that you secure them using strong passwords and two-step verification if possible. And then here are these resources that we talked about, investor.gov. This is the website that I was just on that we can kind of poke around some more if you want to. You can sign up for these investor alerts and bulletins. And then I'll leave this slide on just for a little bit. This is how you can reach out to the SEC. You can always call or email the Los Angeles office, losangeles@sec.gov, or there's our phone number on the slide on the screen. At the sec.gov and at the investor.gov websites, there are the portals where you can submit a tip or complaint. If you would rather mail us or call us or email us, that is just fine. Everything that every kind of communication, whether it's an email or a phone call or a letter, ultimately has to go into the database, the TCR database that is linked to that portal on the website, sec.gov. So if you send us a letter and you prefer to do that, that's totally fine. Just know it does manually then have to be entered by the staff into the database. And so sometimes it actually takes longer to process inquiries that come in the old-fashioned way. Really, the fastest way to get it to us is to submit it through the online portal, which is secure. Once you put it in there, everything that's in there is not publicly accessible. It's only accessible by the SEC staff. So it's not like the whole world can see your complaint. Only the SEC staff can see it. But we will begin looking at it right away. Our investigations are non-public unless and until we file something in court when it becomes public. So we can't confirm or deny whether we're investigating something. We can't share the results of the investigation with the public unless and until we file a lawsuit. And so likewise, we can't share information about complaints that we receive other than with other law enforcement agencies. So when you put it in the database, it's not like the public would be able to see it. We do also, let me go to investor.gov again and show you the portal and show you a little bit of information about our whistleblower program, because we do also have a whistleblower program. So if I were to go down here and to submit a complaint or question, it's really a pretty simple portal with just some data fields that you would enter. But one thing that you can do is you can submit as a whistleblower. So for example, if you work for somebody and you start to suspect that that person is running a scheme, or if you get word of a potential scheme, somebody approaches you, a neighbor or a stranger, about an investment that you think might be a scheme, and you want to submit as a whistleblower, you can do that. Whistleblowers have additional whistleblower protection, and if your tip is credible enough and robust enough that it leads to an investigation that results in a filed action against a fraudster, you might be entitled to a monetary reward. So there's just a little information about the whistleblower awards and protection. Essentially, as I say, if the tip leads to an enforcement action, it's quite possible that you would be eligible for some kind of monetary reward. And I don't work in the office of the whistleblower. I don't know exactly how they're calculated, but I believe that frequently it has to do with a percentage of the money that was involved in the scheme, and sometimes it can be quite large, in the millions of dollars. So if you have a tip that you want to submit, I would strongly encourage you to read about the whistleblower program before filing a complaint, because you might want to file as a whistleblower. And then there are guides on how to submit the information, but it's really pretty much, I'll just give you a quick sense of what the form looks like. If it'll pop up for us. It's really pretty straightforward. What is your complaint about? What were you investing in? And your contact information is pretty much what the complaint is. So let me go back to investor.gov, and we'll just take a couple minutes looking at the website. Again, as I say, lots of pop-up information. Understanding fees, I think, is something that I would also strongly recommend. Here, as you can see, is on the landing page for that part of the website, a graph that talks about the impact, really demonstrates the impact that fees can have on investments. So if you're investing, let's say, in a mutual fund or something that is charging, working with an investment advisor who's charging a fee, even small differences in the fee can have a pretty big impact. So here we see 3 individuals who've invested $100,000 and kept the $100,000 in for 20 years in the same investment, but they've used different investment professionals to make that same investment. One person, represented by the blue line, is using an investment professional that charges a 25.25% annual fee, and the person represented by the green line, paying the highest fee, is using an investment professional who charges 1% annual fee a year. Those sound really low, and the difference between the two is pretty small. But over the course of 20 years, that adds up to a lot. The person who invested $100,000 over 20 years and is paying the largest fee of 1% ends up with about $180,000 at the end of 20 years. So an $80,000 return. The person paying the lowest fee, a 0.25 percentage point fee, making the exact same investment at the end of 20 years, ends up with $210,000. So those fees cost the person paying the highest fee $30,000 roughly over 20 years. That's a lot. That's a pretty big difference, especially as you think of it as a percentage of your original $100,000 investment. So knowing what your fees are is really very important. And this has some questions that you can ask your investment professional about fees. So that's a really good place to go. There's a general search tool up here. So if you just want to put in a search term like mutual funds, you can pull up all kinds of information about avoiding fraud generally, compound interest calculator, all kinds of useful information. So I'm going to stop sharing, and I will also put myself back on screen so that I can take any questions that you might have.
Thank you, Carol. Oh, I always learn so much on during your presentations. Thank you so much. So I have a few questions. The first one I have is, how can I find a reliable financial professional? I know you mentioned it earlier.
Yeah, that's a good question. And the first thing I would do is go back to investor.gov and put that question in the general search tool, and you'll find some various guides that will be very helpful. I talked during the presentation about being skeptical of where you get your advice from, even if it's somebody that you know and trust, like a close friend or a family member or somebody whose respect you has been earned by you. That is very true, but I would also say that's not a bad place to start. If there are people in your life that you trust and they work with financial professionals, maybe ask them for some recommendations. But the key is that that should not be the end of your research. After you've gotten those recommendations, you want to go and do your own research. You want to make sure that they are in the databases that I showed you. You want to ask a lot of questions of those financial professionals. Just like before you say hired a roofer to replace your roof, you'd want to get a number of quotes. You'd want to do interviews of all the companies. You want to do the same thing with a professional. Get a few recommendations, do your research, go to investor.gov and arm yourself with some good questions. You want to make sure their approach is consistent with yours. Like if you're starting out very early at the beginning of your investing career, you've got a long time horizon, maybe you're prepared to take on more risk than somebody, say, my age, who's getting closer and closer to retirement. Probably, I don't have as many earning years to make up any losses. So I'm probably a more conservative investor than somebody in their 20s. I want a financial professional whose investment approach matches my own risk tolerance. Knowing your time horizon is really important. How long until I'm going to need these funds? How much risk am I willing to take on?
Perfect. Thank you. So, I mean, that's very true. Like, yeah, if you're young and starting out, you're probably going to be looking at different investments, like different strategies as opposed to older. I mean, definitely.
Yeah.
Another way is, what is the best way to start investing? You were mentioning.
Yeah. So especially if you are just starting out in your professional career, or even if you're long into your professional career, if your employer offers something like a 401k and you are not participating in it, you should probably participate in it.
Yeah.
This is you should do your research because different employers offer better or worse investment plans. But if you're lucky enough for someone that offers a 401k, do your research and you probably want to consider participating in it, especially if they have matching. And if at all possible, you want to match up to the highest amount. So when I'm talking about investing generally, there's a presentation that I give that has a slide that is actually very impactful, I think, for a lot of people. I've shown this slide to my daughter who's in her 20s. If you start investing early, the amount that you need to take out of your pocket to meet your retirement goal, assuming you invest wisely in something that pays those consistent, roughly 10% returns over the course of your life, is so much less than if you start later in your life. And to meet that same goal, if your goal is $1 million, if you start at 20 and you invest consistently over time, so much easier to meet that goal than if you don't start till over 50. So starting with your 401k is a good way to start. But also for just generally speaking, inside your 401k, or if you want to set up an IRA for yourself, or maybe a Roth IRA,
Yeah.
particularly if you are at the early part of your professional career and your income is lower, a Roth IRA might be the way to go. I cannot give investing advice, but for a lot of people, something like a mutual fund makes sense because a good mutual fund will expose you to a great variety of products across the market. So if you're invested, let's say, in a mutual fund that's tracking the S&P 500, you're investing in tech companies and, oil and gas industry and general consumer goods. And so if the consumer good part of the market is having a downturn, maybe the tech market is having an upturn. So you really are allowing your portfolio to be balanced. And if we have just a minute, I will
Yeah.
take
Yeah.
you, let me take you, if I can, to another website. Let's go to our Jordan Belfort and move away from Mr. Belfort and go to this website, finra.org.
Yes. Yes. FINRA.
Now, one thing you can do on finra.org is do the same broker check that you can do on investor.gov and check the professional. But you can also, if I can find it, the tool, I need to be more precise than that. Let's spell it correctly, which I think I didn't. Oh, sorry, I should have had it linked for you. There, let's see if it'll come up for us. There is a tool on this website. Here we go, Fund Analyzer, Mutual Fund Analyzer. That is really very helpful. So I would encourage you to go to this Fund Analyzer tool. If you've identified, let's say, 3 or 4 mutual funds that you are interested in, you can put these funds in this tool and it will do a side-by-side comparison, including it will show you the fees that are charged by the funds. Remember how I just talked about how fees are really important. And you can get a sense of, do the products that are in this fund match my investment goals? Are the fees that the fund is charging reasonable? This is a good way to do some research if you are considering a mutual fund. And again, I cannot give business or legal advice, but you may just want to Google what, now I'm going to blank on his name, Warren Buffett says about mutual fund investing for the average investor. That's just individuals like you and me, sometimes called mom and pop or retail or Main Street investors, and just do a little research.
Yeah, I mean, they always say it's like diversify your portfolio. It's like good to not have all the eggs in one basket. It's good to spread it out.
Exactly.
One last question is, what is the best way to contact the SEC? I know you mentioned in the resources earlier.
Yeah, so on the very last slide, which I can put up again, there is some contact information. You can, as I say, feel free to call us or email us if this is what you prefer. But honestly, if you have a tip that you want to submit of a potential fraud, putting it in this database, the TCR database, either at investor.gov or at sec.gov with a link is the best way to contact us. But we are, of course, happy to take your emails or phone calls or mail. Drop-in visit to our physical site is usually not the best way. Not a small number of us telecommute now, but also, people are in court, people are in trial, and so it can be very hard. So I strongly encourage you not to do that, but call or email or submit via the TCR portal.
Gosh, of course, now I said last question, one more came through. Let me see really quickly. And this, okay, so can FINRA help research impacts this investment?
So whether you go to investor.gov or you go to finra.org, you can find resources on sustainable investing. FINRA is not going to do the research for you, and the SEC is not going to do the research for us. So you can't call us up and say, please recommend some sustainable investing. You could, if you wanted to work with an investment professional like a broker or an investment advisor, you could do research and identify some investment professionals who work in this area who would invest for compensation, on your behalf in those areas. But you can find some general information about sustainable investing on investor.gov, and I don't know for sure, but probably on finra.org too, just some general guides to that. But in terms of like a specific investment advice, invest in this sustainable fund or this stock of this company, we can't give that advice, and FINRA is not going to give you that advice. A broker, dealer, or an investment advisor would be willing to give you that advice for compensation, either a commission or assets under management.
Okay, so thank you so much. We're out of time. So thank you for a great presentation, Carol. If anyone missed any part of this presentation, it will be available for viewing at LAPL's YouTube channel, youtube.com/Los Angeles Library. And then also for more information on all of our Financial Planning Month programs coming up, lapl.org /financial planning. We have a financial planning day next Saturday at the Central Library. And Saturday, October 19th. More information on that as well on the Financial Planning Month website. So thank you again and have a great rest of your day. Okay.
Thank you.
Bye.
Bye.